Hello guys, welcome back to a new episode. This is RALLYTOP Investing 3.0. In today's episode, we are going to be discussing about smart money reversal trade setups. Now, do you know that you can spot high probability reversal setups using the daily time frame candlesticks? Do you also know that you can as well spot high probability continuation trade using the daily time frame candlesticks? That is not to say that you are going to be entering your trade on the daily time frame. All right? All you do is that once you spot these reversal signals that I'm about to show to you on the daily time frame, now you need to make transition to the 15M to take high probability setups there. But first of all, let me tell you what you should understand about the daily time frame candlesticks. Because in trying to use this methodology, you don't need to mark structures like you used to do on your 1H or your 15M, your 5M and all of that. All right? All you need is to use the daily time frame candlesticks to be able to understand what exactly is going on in the market. And for you to be able to understand that, you need to understand how the daily time frame candlesticks are formed. Now, this is 1 day candlestick. This 24 hours candlestick, just this one candle. All right? This is a bullish day. Now, what happens? Price opens here, right here. All right, once price opens here, it trades lower to form the low of the day and then expands upward and got to this high and retraced, and at the end of the day it closed here. So this is open, close, high, low. Now within this candle range, this one candle range, high and low, a lot of data is inside of it. A lot of information. When you get to your lower time frame, you find a lot of information inside of this candle range, high and low. Now, on your daily time frame, this is what you want to see. As you can see, price printed the first day, it printed this candle. Now, you cannot use one candle to determine reversal or continuation. All right, trade setups using the daily candlesticks. You need 2 candles, that is 2 days of data, all right, on the daily time frame. Okay, so the first day it printed this candle, second day price closed above. Now the third day price also closed above, fourth day price closed above. Now look at the 5th day, price failed to close above. What happened? Price wicked through the previous day's high and eventually close below that previous day's high. This is simply liquidity sweep. So the smart money use this wick to clear the liquidity resting above this high. Once you find this kind of thing on your daily time frame, it shows that the smart money is about to take price lower. Now take note, it may be a complete reversal. It could also be just a retracement, and therefore you need to understand that the predominant trend is bullish. This can only be just a retracement, so you don't need to hold your trade for too long. So this is what you want to see. Now on the daily time frame, you can actually know the structures of the market. Look, like from here, okay, price printed this high, pull back, printed a new 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 high. Simple. That's what you have in the market. Look at it. This is what you have. High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is the information that is contained on the daily time frame. The same thing with the bearish day. Price printed this one. The following day, it closed below the low. Third day, it closed below the low. Fourth day, it closed below the low. Fifth day, look at what happened. Price failed to close below the low to continue with this downtrend. Rather, price took out the previous day's low with a candle wick. That's liquidity sweep. This is a clear signal that the smart money wants to retrace before coming back to continue with this downtrend. So you, as a smart trader, you can take advantage of that retracement to make some good money for yourself. How do you do that? Now, let me show you. Once you find this pattern, this one or this one, all right, on your daily time frame, what you need to do is to scale down to your 15M. In the case of a bullish structure, scale down to the 15M. All right, let's assume that this is the high. This one is the high here, this high that is taken out. All right, so let's assume that is it. Then you will need to wait for change of character. This is your chalk. So after chalk, you need to wait for inducement. All right, and price has to take out that inducement and then tap on any OB or area of interest, and then you can go short. Now, the area of interest could be order block, order flow, could be fair value gap. These are the three areas of interest that you look for in this kind of scenario. So this is what you will find, you will want to find on your 15M. So meaning that you'll find an OB here, high probability OB here, in order to go short. Okay, simple. If it is a bearish day, the same thing will happen. You want to see price. All right. Let's say here, took out this place, this point here, and then price went higher to break chalk here. Here is chalk, and you need to wait for inducement after taking out that chalk. All right, your inducement here, then you can enter your trade from there, from any OB there, going long. Simple. So you will find your OB here, somewhere here, so you can go long. This is the process you need to take. Simple. I hope this is clear. So I want to take you to the live chat now, because I didn't intend to make this video too long, and it's getting too long already. So let me take you to the live chat and show you what I mean. This is a powerful strategy if only you can follow the rules. Now, let's start from here. This is your daily time frame now. Okay? Okay. So, daily time frame. Look at this. You don't need to mark out your structures and all that. You don't need that. All you need is what I've just shown you, the pattern I showed to you. All right, now look at this pattern here. Look at this candle. Took out this previous day's candle low. Can you see that? It took it out with a candle wick. This is what you want to see. All right, simple. That's what you want to see on the daily time frame, that is. And now you now go, once you mark that one out, you now go to the 15M. Can you see? Very simple strategy, but powerful. Go to the 15M time frame and identify where you marked. Okay, this is where we marked. Okay, this is where we marked. All right, so this is where we are. It took out that low, and then price eventually came down here after taking out the low. All right, you wait. You don't just rush. All right, until change of character occurs. So this is the low now. For this low, change of character. Where is change of character here? This is your change of character. Simple. All right, and as you can see, it took it out. After change of character, what do you want? Remember what I showed you, that diagram I showed to you on the daily time frame. Now you need to wait for inducement. All right, where is the inducement? Here. This is your inducement in the market. So we want to wait for that inducement to be taken. If this structure is maintained, if price doesn't give us a new high, all right, if the structure is maintained and price start coming down, where is your OB? Your OB, because here, if we want to use order flow, It's already mitigated. So this is your OB here. So you can use OB. Simple. I'm talking about in the event that this structure is maintained. But if it takes out this high, then we'll change the whole of the picture we have here. All right. So let's see what happens. Okay, so as you can see, we have a new high. For this new high, all right, to be confirmed, for this new high to be confirmed, it needs inducement, and therefore this inducement can be transferred from here to this point. Simple. That's your inducement in the market. Once it takes that inducement, where is our OB? Then this OB here, we have a new OB here. This one, very clean, clear OB. Why? We would have marked this as our order flow, but it's already mitigated. So this is our OB. Clean, clear. Clean, clear. All right? So we continue to advance price. Price has taken out our inducement, but is yet to tap into our area of interest. Okay? Simple. Okay, we have a new high. And then where is the inducement for this new high? Look, here is Asian high, Asian low. So this is not an inducement. All right? This Asian low is your inducement here, this one. This is your actual inducement. Our area of interest is still very valid here, this one. Very, very valid here. These two areas of interest. But this one is more probable than this. Okay, so price has tapped into our area of interest now. So we want to go long from there. All right, where do we target? Let's look at where we target here. It's as simple as that. We don't need to complicate anything. This is where we'll target. This is our high. That's our target. All right, but we cannot just wait because price can do anything. We cannot just wait for price to come to this. Once price takes out this high, we can move our stop loss to break even. You can actually enter two positions here. Once price closes above this high, you can use one of the positions to move your stop loss to break even and let the remaining position to remain where it is and then let it run. Simple. That's the way I trade. Okay? So, but this is our ultimate take profit. So let's continue to advance price. You know, price has taken out this high with the candle closure. So you can move your stop loss to break even. All right. So you will be in a risk-free trade. So we continue. Boom. Look at it. Price has smashed our take profit. Very simple trade setup. Now, let's get back to the daily time frame and let's do one more example. Let's just do one more example. Let's play price from here and see whether we will have any example. No, we don't have a good example. No good example just yet. No good example. Okay, look at this good example here. Before we go any further, let's look at this now. Let's look at this example here. Let me play price from here. Okay, so look at this now. Price took out this high. Let's see whether price took out this high. Can you see that? So price took out that high. Okay, it's a clear indication that there could be a form of retracement here. So let's see what happens. Let's see. Let's get to the 15M and see whether we have any setup there. Okay, so Here is the 15M now. So now, take a look at what happened here. The first time price took out this structure, or it took it out. If we wanted to go by that, this is it. This is your chalk. That's your chalk. Simple. That's your chalk. After chalk, you need inducement. And where is the inducement here? For this low to be confirmed, it needs inducement. This is it. That's your inducement in the market, guys. All right? After inducement, where is your area of interest? Here is your area of interest, guys. I will not sit here and begin to show you only winning trades. I want you to understand that you will take losing trades in the market. So this was a loss. This is -1. As you can see, price blew through it. It met all our requirements, but price blew through it. Can you see that? I just wanted to show you that one to know that it's not always winning trades. Now price has taken out this high from there, so we need change of character here. All right, where is the change of character? Here. That's your change of character. Simple. After change of character, you need inducement. Okay, now again, this is your actual inducement. This is not inducement. This is London high and low. I don't want to go into that deeply. All right, so this is actually your inducement in the market, this one. So that's your inducement in the market to confirm this low. After inducement, what do you want? You want high probability area of interest. Now, as you can see, if you want to take this order flow, it's already mitigated. Okay, now this is your actual order block. This one, this black candle. Why? It took out the high of the previous candle. This is your actual order block, but if you mark this OB, it's already mitigated, and we need fair value gap. Remember what I told you at the beginning? I said there are 3 areas of interest we look at: order flow, order block, and fair value gap. So where is your fair value gap here? This order block is already mitigated. Look at your fair value gap from this low. All right, let's play price from here so that you can understand what I mean. I don't want to confuse you. So this is your fair value gap, this one. So we stretch it out. So we continue to play price. Let's see whether price will go in our favor. Now, if price goes in our favor, now let's see whether price has come into this fair value gap. Okay, price has tapped into the fair value gap. So where do we take our profit from? Now, number one, when price closes below this low, this is very low. Once price closes below this low, move your stop loss to break even. All right, to be in a risk-free trade. But ultimately, where is your target? Our ultimate target will be where? Let's see. Our ultimate target will be here. But as price is coming, you need to be taking partials on the way. Very important for you to take partials. Okay? You need to take partials. All right? As price is coming down. Now from there, this is our next area you can take partials. You can take partials there too. And then ultimately, this is your ultimate take profit here. This is your ultimate take profit. Simple. Can you see that? So let's continue to advance price and see what's going to happen in the markets. Okay, so move your stop loss to break even. It has closed below this very low, so you can move your stop loss to break even from here. All right, simple. Okay, now it has closed below this one, this other low. All right, then you can move your stop loss to this point. Simple. And then let's continue. Okay. Now, ultimately, It has taken out the third low. So the ultimate target is this one. I think so. Yes, that's the ultimate target. I don't know whether it will get there, but at least you should be trailing your stops. You should be trailing your stops like I told you. Okay, so eventually it smashed our take profit. Can you see that? Simple trade setups using the daily time frame candlesticks. Simple. You don't need to disturb your head marking structures and all that. All you need is daily time frame candlesticks. I hope you understand that, guys. This is what you should sit down to be doing. Study this very methodology and you will be grateful you came across this video. But if you are new to our channel, please consider subscribing and turn on the notification so that you can be notified whenever we post a new video. And if you haven't joined our free Telegram channel, please do so just immediately, because some of these high probability trade setups, we post them there sometimes. All right? And if you are yet to join our VIP community and you want to learn how to actually trade like a professional, because some of these things we discuss deeply in our mentorship class, you can actually be part of it. Okay, guys, I see you in our next video.